Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Monday, 13th day of June 2016, and we are looking at the Dow Jones Industrial Average under triple-digit drawdowns today, closing off about 132 points, also closing near the lows of the day at 17,732. The same can be said for Standard & Poor's, closing down dramatically, almost a full percent on the day, 0.85 at 2069.50, and that's just off of the low of 2068.75. So traders, a lot of information that I do want to cover on today's trending markets. First, to our current trade, we were obviously stopped out today of our long S&P in at 2110. Our stop was just below 2080s, call it 2079, effectively a 30-point drawdown or loss on the trade. Sorry to report. However, when we look at this market, we can absolutely see that the writing was on the wall in terms of the resistance that we had, the headwinds that we had. Once this market traded above, effectively above that point, we really were looking at this breakout as a potential for U.S. equities to move to record highs, all-time highs. I absolutely still believe that that will happen. Quite obviously, I don't think it will happen on this current rally that has concluded with a vengeance. When I say a vengeance, I'm talking about the relationship between where the market closed at, here, and then where it opened on the following day, here, of course, and here. So we effectively had gaps in between the close of the day and the open of the following day, as you can see right here. Now, it's not a true price gap or price void because you do have highs and lows that do go into that trading range, like you can see that right here. Now, what are we looking at? If you recall from Friday's show, my sense was that as long as we remained above the 50-day moving average, we had a really decent probability that what we would see would be a small correction in the market that would culminate somewhere above this price point, call it 2080, 2082 in that area, and then move back up. That was obviously not the case. Worries about whether or not Britain is going to leave the European Union put equities markets globally under significant pressure. Oil was down again today. We'll take a look at oil in just a second. And the dollar also had an effect on what we were looking at. Although it wasn't that strong today, it did close nominally lower on the day. In terms of the S&P, the fact that we closed below the 50-day moving average. 50-day moving average is coming in, I believe, at about 71 or 72. You can't really see it that well, but 69.50 is an effective close below that point, as you can see right here. And so my sense is we could see further downside pressure. So traders, of course, we had a nice rise in the precious metals markets, gold specifically up almost a full percentage point on the day, and the dollar really created a little bit of momentum for that, closing off about 0.25%. You can see that here on our daily chart. The noteworthy thing about today's activity on a technical basis is what I do have here is a 50-day and a 200-day moving average. And we look at the dollar in the same way that we would look at the Standard & Poor's long term, and the move under, of course, 200 signified a lower dollar, and the fact that we are now below the 50-day moving average could be signaling yet lower prices ahead for the dollar index. Lastly, I do want to take a look at crude oil. Crude oil closing off almost a full percentage point, 0.96% in terms of the net drawdown today, 47 cents per barrel in terms of the amount, and 48.60 in terms of the settlement price in crude oil. If you recall from Friday's show, we talked about the fact that what we had noticed was that as long as this market had maintained this upward bias, even within that upward bias, and I have kind of widened the length of the channel itself. I had it set for, I believe, 20. It's now set at 27. But nonetheless, we saw the market really trade within the channel, moving from the top to the bottom of the channel. We also noted that we had a close on Friday that was actually slightly below the channel, the support channel at this lower level right in here. And because of that, I had some real concerns as to whether or not we would see the market recoup or we would get a significant break below this particular price point. Now, the key is the fact that we are still right within the boundaries of this price point, but we've had this dramatic low, the low today taking us closer to $48 a barrel. And though it closed well off of the lows at $48.61, my sense is that this break could be signaling really significantly lower pricing in oil, but more importantly, a top that occurred just shy of $52 per barrel. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.